Okay, everybody, we are getting set for another great quarter, guys. Thank you for joining us on this episode. We are live on social media, LinkedIn, Twitter, YouTube, all of that jazz. So my name again is Kevin Hill. Andrew Cox over here in the co-host seat, and our special guest today, Ryan Schreiber from Carrier Direct.
Thanks for having me.
You bet.
Great. I gotta make the joke now.
Okay.
So when we rescheduled, I slacked one of our teammates to say, "Hey, we're getting rescheduled." Great timing, guys.
Great timing, guys. Yes,
so great
definitely.
timing, guys. We're a little bit late, but
That's okay. It's okay. Still a great hour of content laying ahead.
Yeah, hopefully I can still qualify for detention.
Oh yeah, I think you
Yeah.
can.
I was early,
it?
but I was waiting.
No?
Yeah, I got signed in on
Are
time.
you sure?
Yeah, I got signed in on time, but you guys were backed up, and so
Yeah, I usually make people notarize.
yeah, there was no place to park, so I had to circle the block, but I was still able to get in, checked in on time. Not just the guard shack, but I got to the window.
To the window.
I got to the window.
That's good. You always have to get to the window.
Yeah, exactly. Right.
Yeah, definitely. So we have Ryan Schreiber here from Carrier Direct this week. We're going to talk a little bit about earnings, and then we're going to talk about technology and trucking and kind of what the future holds. And basically it will feed into kind of the earnings season and what we expect going forward. And then we're going to always talk about the DHL Supply Chain Pricing Power Index. We'll do our long-short segment on some fun segments there.
That's right.
And, we'll probably talk a little bit about broker comp, too, as we talk about tech. So that's always good.
These are all great conversation points.
They really are.
Who doesn't like to talk about all three of those things, though?
I know.
Money, technology, and fun. That seems pretty good.
Yeah.
It is. It's a great combination. So let's kick it off. Let's talk about earnings season. It really got started a week ago Friday with JB Hunt. And then last week we had Heartland and Martin and Covenant and a couple other
CSX. There's a couple rails.
Yes, a couple rails.
Yep.
Yeah, so let's look at Heartland first. Refrigerated carrier based in the Midwest. How'd it turn out?
Fourth quarter was okay. I think they were pulled back a little bit by an acquisition they made of Millis Transport back early Q1, Q2, and they've kind of had a track record here of acquiring companies with a high OR, not relatively high, but high in the mid to low 90s.
High relative to Heartland.
Yes,
right?
exactly. Yeah, high relative to them. Because they've constantly kept an industry-leading OR for decades. They've never had an OR above 90. This quarter was no different. So they acquired Millis Transport with an OR over 90, but they were able to bring OR down under 90, even though in Q2 and Q3 they had it above 90, but never had a yearly over 90. Strong top-line growth with the acquisition, 14% nearly, but earnings per share was down 40% year over year in Q4.
It's a challenging market for everybody in 2019, especially after the strong 2018. The comps are bad. Certainly EPS, ORs, profitability is it's expected to take a hit for all truckload carriers, and that's what we're kind of seeing across the board, right, Ryan?
Yeah, I mean the difference between like asset and non-asset or asset, you have all these fixed costs. And so, the variability of the market. Non-asset's all about how fast you move. And so, you really see, obviously you really see that with this acquisition and with these earnings and all of the asset-based earnings.
One thing that helps Heartland, though, with, being an asset-based carrier is they rarely carry debt. Only three years that they ended with debt in the last 15. So they're generally debt-free company, which helps them to be, I guess we can talk about a little bit the pros and cons there of being a debt-free carrier. Kevin, I don't know if you've ever worked around any debt-free carriers. They're pretty rare, but you got any insights, pros and cons of being a debt-free truckload carrier?
Yeah, most truckload carriers take on some debt. Mostly it's manageable debt, but when you get down to debt, so sometimes you can really leverage yourself up a little bit too much. And certainly the downturns are hurt a little bit more than the upturns. And a lot of that is just excess debt over basically capital improvements and CapEx. Although, like this part of the market, the more leveraged you are, the more upside you have. 2019, the lower, the more downside you had. But right now, we see an inflection point coming at some point, probably mid 2020, and the over leveraged truckload players out there have room to run.
I love gambling. I mean, you're betting on the come, depending on how
You
leveraged
are.
you are. And the thing about trucking is the troughs are always much longer than the peaks. I mean, the
Mhm.
peaks are really, really high when they come, and the troughs can be pretty low when they get there. But normally you're in this like kind of middling market. I mean, the line between excess capacity, slack capacity, and over and under capacity is pretty thin. So
It
really,
is.
it's these big swings, and the troughs end up just kind of sticking around a little bit longer. It takes too long for the
Yeah, just a really minor move between supply and demand,
yeah,
and
absolutely.
trucking has outsized results all the time.
Yeah, and so that's that's the risk, obviously, right? You're betting on the come, and you're betting that next peak's going to carry you through, is going to kind of take away. And last year, obviously, a lot of people lost that debt. It was what 350 trucking bankruptcies or
Oh
so.
yeah, quite a few
Oh
more.
yeah, more than that.
Yeah.
Yeah,
Yeah,
that was in the first half at least.
yeah. So you saw that you're going to be wrong. You
hmm
didn't make the right long term investments.
So what about Martin?
Oh yeah, we can move on to Martin. So Martin, the kind of a similar story to JB. Their dedicated was a really bright spot for them. Also carried them through to not a terrible quarter. They did have a pretty poor quarter when it comes to truckload. Their operating income year over year was down nearly 4%. But they had a really strong dedicated and brokerage quarter, so it kind of kept them afloat through the earnings.
Yeah, you see that basically everyone that's reported so far, and CH Robinson's coming out tonight
hmm
after market. So here in a couple hours, so they'll be reporting, and you're seeing the peak holiday season, uh, Q4, but December specifically between
Right.
Thanksgiving and Christmas was a tight market. We
Mm.
saw that with our sonar data, and you probably saw that from some of your brokerage clients.
Yeah, absolutely. We were hearing
As
it was
well.
tight. Yeah.
Yeah. Any stories about that?
We were obviously peak this year was not what people expected it to be, or what it had been traditionally, and certainly as with 2018 as a comp year over year, it was not competitive. But capacity definitely had tightened. I mean, whether that was drivers saying, "Hey, we're going to park the truck because let's take an extended holiday. I'm not going to make that much money anyway," or what have you. But it seems anecdotally, and certainly Sonar data is going to tell a much better story than anecdotally what we're hearing, but that has kind of carried into Q1. This Q1's better than expected.
It has. The first couple of weeks of January has been better than what we expected as well.
Yep.
It's slowing down a little bit, but that's what you expect.
Yeah, absolutely.
Going through the doldrums of January, where there's not a lot of freight. It's just the worst quarter in trucking
It
and
always
freight
is.
transportation. There's no way to get it out of that. But as far as January from last January, there's been tightness in capacity, but we've been hearing anecdotally that the rates really haven't caught up yet.
What I like about from Martin is their customer concentration. I mean,
hmm
Mhm.
less than no shipper makes up more than 2% of their volume. I mean that helps you. Obviously industry specific trends are important in there, or segmentation is important in there. But that definitely helps you ride that wave, right?
Yeah, it gives you
definitely
much
does.
more stability
Yeah.
in price. Allows you a little bit more power in negotiations.
I'll be interested to hear what So to your CH Robinson
Yeah.
point coming out tonight, I'll be interested to hear what they say. They always talk about how humans are the biggest risk factor
Mhm.
in their in their 10Ks, and in scaling up and down to meet demand. The human piece of it, announcing these investments in technology. I'll be really interested to see whether they lean in on that to sell that more to the market. Maybe they come off of that and talk about uh, the benefits they've seen from relaunching FreightQuote and those kind of things. So, what the numbers are less interesting to me. What'll be really interesting to me is what CH Robinson has to say tonight.
Yeah, it's going to be an interesting narrative because they have been out on the PR front.
Yep.
Right, with FreightQuote a couple months ago, and then their CEO Bob Biesterfield called in and did a wonderful interview on What the Truck that you can find on FreightWaves.com. And it's about having that incubator,
Mm.
really packaging and branding that $1 billion investment over the next 5 years. And we'll get into a little bit more of technology and transportation here in a second.
Sure.
Anyway, which is it's just really interesting. We're kind of at that dawn of a new age, and going through kind of the the learning pains right now.
Yeah.
Right. What about Anything else on the
Oh,
earnings
just
front?
for
this
the
week
ones
or
coming
next
up.
week?
C.H. Robinson and Canadian Canadian National are coming out after market today. Knight Swift and Snyder tomorrow. So the big boy carriers will be out tomorrow before the market. Just be on the lookout for FreightWaves coverage of those. I'm sure we'll have articles out all week about their earnings. So stay tuned.
Yeah, and I saw where Pam Transport, we broke the news this morning. Pam Transport bought Celadon's Laredo facility.
Which I
So
thought was
it makes a
interesting.
lot of sense.
Didn't Pam recently announce they're getting out of Mexico?
No, that was
Covenant.
U.S. Express and Covenant.
Yeah, right.
We're
right.
getting out of Mexico. Pam is really all in on Mexico.
Yeah, I mean,
They do a lot of auto manufacturing, auto plants, and they haven't reported their earnings yet. It should be a bit better than the third quarter because there was no GM strike. There was in the third quarter, but it'll be really interesting to see what they guide and kind of explore on their narrative on the new purchase from the Celadon terminal down in probably off Mines Road in Laredo, Texas.
Yeah, that definitely will be interesting. I mean, it seems like south of the border is pretty open playing field for them right now, with Celadon out, with Covenant and Express U.S. Express leaving the Mexico market.
Yeah, because Celadon is a huge player,
Oh, yeah.
both in auto parts and
Absolutely.
in Mexico.
Pam
So,
definitely stands to benefit more than anybody else from that. For
yeah,
sure.
I think they'll probably be giving some great insights in their PR release or their conference call whenever that comes around this season.
Yeah, they'll probably get a great quarter, guys.
They probably will.
Yeah,
So
they'll get a couple
great
of
quarter guys.
Yeah.
Hey, great quarter guys. Very good.
All right, so you want to jump into the meat of this conversation here?
Yeah, let's talk about tech. You want to talk about broker compensation a little bit? No, let's do that afterwards. Let's trucking and technology is something that Carrier Direct specializes in.
Yeah, we live right at the intersection, right there.
Right there, and we wanted you to come on and explain to us what's going on in technology as it relates to trucking and brokerage and just the entire transportation and logistics industry.
You were trending in your comment right before we threw it back. You were trending in your statements around sort of their investment, their $1 billion. An interesting question is, where is that spent? Hunt's $500 million investment into 360. A lot of that was just killing the mainframe. They're spending a lot of money killing the mainframe, and they're obviously also spending money building the future tech. But there's a get up to par spend in there. It's sort of, if you can pull back the curtain and see what the Wizard of Oz looks like, it's interesting to know what Robinson might be spending there just to kind of replatform and get up to sort of what today is a maybe more usable platform to be able to build on top of.
What do you think, whether it's Robinson or any other large brokerage out there, or even small brokerage out there, what's the number one technology investment they should make, and trucking companies as well? Let's not leave the carriers out.
What's the number one investment?
What's the number one investment that companies in transportation and logistics should be spending right now today? What's the number one project that they should tackle?
So I'm going to give you a very consultant/lawyer answer. It depends. I mean,
And you're both, so
and I'm both. Good. So that it's core to me. The biggest misconception that we come up against constantly when talking to our clients and whomever else we might be talking to is that technology is some sort of magic elixir that's going to solve every problem. It's not. No. I mean, it starts with your business goals. It starts with what problems you're trying to solve, and those start with the C-level employees. And so the biggest investment that people can make in technology, or the most important thing to focus on with technology, is right there. And then the second piece is got to be, from a mentality standpoint, stop thinking about TMS selection. Stop thinking about TMS as the center of your technology strategy. If I can kill the term TMS, just period, I will have lived a good life. So the biggest investment that people can make in technology is developing a technology strategy. And that doesn't necessarily mean build. That doesn't necessarily mean buy. Really, the first step before you spend any money on software, build or buy, is a strategy that's going to carry you 3 to 5 years down the road.
And what is that strategy like in concrete terms? What's the number one
different for everyone
part of your strategy? It's probably is different for everyone, but there's got to be some kind of common theme.
Oh, like from our clients, what's a common theme is definitely So a common theme that we're definitely seeing is how do we is getting away from these monolithic applications that are the legacy TMSs, and whether that's you used to be on an AS400 that you custom built, whether it's you bought one of these off the shelf providers. Um, the architecture of those are really blockers to innovation, and particularly if you bought something off the shelf, because they're gatekeepers to what you can actually do with your software and with your platform. So really the investment in, I'm going to kill the term TMS right here and now with you guys. TMS at its core is really about load execution, and so starting around load execution, that workflow is pretty simple and pretty basic and pretty dissimilar or pretty similar across the industry. So starting with investment in load execution and looking toward what are the other sort of microservices that you want to plug into. That might be a really heady answer.
It is a really heady answer.
Yeah.
It definitely is. So,
what are small
So-
investments that people can? So
what are the building blocks?
yeah, absolutely. So there really are two ways to look at it. There's build the future, which is the Convoy, the Uber, the Hunt, 360. Those are really build the future, and then there's be enabled. And so, what are the business problems that you're trying to solve, and what's out there in the universe that you can plug into and make better? So Sonar,
Yeah.
I'm not paid to make a plug for Sonar, but how can I?
It's always good though.
How can I consume Sonar, and how can I make it actionable for my people? How can I get it in front of them in a way that allows them to make better data-driven decisions on a day-by-day basis? I said earlier, brokerage is a speed game. So like the quicker that I realize the market is moving either toward me or away from me, from a capacity perspective, I need to make better data-driven decisions. That's how I make money. From a trucking perspective, it's very similar. Like am I going to make a take decision on this order tender? Are good examples. So looking for microservices that you can plug into that can get you the efficiency. Again, starts with your business goals, but get you those minor improvements in efficiency. You have to support those with training. You have to support those with better process in and out of those technology decisions. But that's really what it looks like, is people making these investments in identifying the right microservices.
Very good. And if you have any questions out there, especially on LinkedIn, we have LinkedIn pulled up right now. Any question whatsoever, we will be glad to answer it. I'm sure there are technology questions out
Looks like
there,
we got a
especially
couple of
for
likes.
transportation. That's always good.
Yeah.
Yeah, that's always good.
Yeah, so I just want to, I guess, we have the conversation built for the next few minutes after this to talk about this Uber partnership with Land of the Lakes. But before we get there, I wanted to touch on a little bit of something you just said about Uber. You used the words to get up to par. And it seems to me that Uber's trying to get up to par by opening up this Chicago office with space for 600 brokers. Do you think that their get up to par is also to take a little bit of the knowledge from a traditional brokerage? They're kind of going to fuse together at one point. Yeah.
There's a human component in technology. I mean, and there will be for a long time. It's technology is to enable the users inside the machine, and so absolutely, like, I mean, Uber's play in Chicago is access to talent that will help them get up to par from the human side of the business. From an architecture perspective, from a technology development perspective, I mean, Uber knows how to build software. They don't need Chicago to build software.
Yeah.
It's absolutely about how do we get more humans to like run this machine, and then eventually, hypothetically, hopefully, allow those humans to do 5, 10, 15x what they can do today.
Mm-hmm.
And so there's certainly a human side to enterprise sales too. And I think that's where the new tech-enabled brokerages and the legacy brokers will start looking like one another, right? So, because basically, you can't automate enterprise sales. You can't service a large account, without salespeople.
You can't bring it in the door without salespeople.
I don't think you can bring it in the door without it. I think I know from being a broker that the exception is the rule. There's always
Absolutely.
exceptions.
Well,
And there's a lot of things you can automate with that, and it should be automated. But I think enterprise sales and being able to handle large enterprise accounts
sure.
is something that is going to be hard to do away with.
The exception is absolutely the rule. In trucking, I think that's the like we should all have to get that tattooed on our like foreheads when we start in trucking. I get asked the question often from our both our asset and non-asset customers. who are in more niche markets, so produce or open deck or heavy haul. Hey, like, do you think Uber is going to come into our space, or do you think Convoy is going to come into our space? And my answer is invariably yes. They're starting with the easy part. We were talking about this before we came in here, right? Right now they're trying to tell a story, or they're telling a story publicly of how successful they've been, but they've been very selective. Uber started in Texas. Why did they start in Texas? More roads, right? Than it, like highway miles than any other state. More intrastate carriers, right? And so that obviously trends smaller, et cetera. I mean, they were very intentional about that selection to prove out the model. They're going to keep working down market, automating where they can. I agree with you that today and in the next 3-ish to 5 years, Uber obviously no one will be able to automate even to the 80%, if you will. But I certainly think that there are many opportunities to automate that is hard for us to wrap our heads around, because it's a data problem, because it's a multivariable problem, and you need people who are a lot smarter than me, data scientists and those kind of things, to really identify those opportunities. And I think, I mean, I'm not all in on Uber. Certainly, I don't think apps are going to solve the problem. We could talk a little bit about long tail capacity and how much that actually represents, and some of those problems Uber is going to need to solve. But I certainly think there are opportunities to service an enterprise account more automated.
Yeah, and basically automating the processes of a brokerage or even a trucking company doesn't necessarily entail an app.
No,
right,
right.
There's a good way to start.
Yeah,
a lot of it is back end.
Yeah, I think it's a good way to attack it. It's like with that Land of the Lakes partnership. It's a second cooperative partnership they've had with big farming cooperatives like Ocean Spray up in the Northeast. But they've focused on, like, it's almost dedicated. It is dedicated freight. It's from point A to point B. We're going to run this 15 times a week. We need drivers that can pick it up. So it's easy enough for them to pick up an app. I'm in Nacogdoches or whatever the Texas city
Nacogdoches.
is. Nacogdoches.
Nacogdoches, man.
Headed to Fort Worth. It's a there and back type of deal. I think, yes, that's the low hanging fruit. Whether they're able to, eventually they'll be able to make it better and do these things on a more
and
less
Texas is the best place to do it, because you do have more interstate. Yeah. You can run 800 miles and be interstate, where not too many states you can run really long hauls. Right. Without leaving the state borders, more highways. You have what we were talking about just a second ago. You have Laredo, Texas, right? Yeah. Because the Laredo freight comes up and it goes to Dallas, Houston, West Texas to the oil fields. You have a microeconomy that is an international, basically a micro. It's a state with an international economy.
Yeah, it's an example. The more interesting question is, why has Uber had success in Texas? When these smaller carriers also have access to DataNext, will have access to Truck Stop, right? Because it's not even just a matter of like post your freight and they have visibility into it. It's a perfect example of remove friction, right? Like, and so our to go back to the question you asked earlier, like, where are the investments happening? The investments are happening in how do I remove friction to increase my outcomes. And so DAT and Truck Stop are going to give Land O'Lakes this. They could have partnered with DAT or Truck Stop to post their freight out to those load boards. The carrier still had to call a broker, had to get somebody on the phone, had to negotiate them with them, and it kind of depends on what the guy had for breakfast.
And Truck Stop just came out with Book It Now.
Yep.
So they're in the beginning. I think they're out of beta now. I think they're actually offering that out to the public. And basically, how do you see that wrapping into the competition with?
That's an example of being enabled, as I was talking about it a minute ago, right? So like, that's going to enable, or does enable, these legacy brokers to keep up, right? And to stay around and to figure out what their product market fit is, to use a Silicon Valley term.
Yeah, and I think those enabled tools that Truck Stop and other Parade has something, and there's a couple other vendors out there that do that. I think that's where the VC money, I think, is going to go in the future, instead of the kind of the Convoy or Uber build it from scratch. Freight brokerage, I think it's more tools to enable the small.
Yeah, and that's what we're seeing.
Yeah, I mean, I think that's where the money's going to go. I think that's where the market is most interested.
Well, I mean,
right
now. Name VC money that's gone to build everything from the ground. Convoy, Uber, Next, LoadSmart,
Transfix.
Yeah.
And I think those companies
So
are
there's
the
5.
mature phase that they're not going to raise.
We can name a bunch. Like, on the other hand, is these be enabled.
Mhm.
We can name a ton more.
Oh yeah,
Parade, Shipwell,
Shipwell.
as another good example.
Yeah.
I mean, we
Cargo Chief is another one.
Trucker Tools.
Trucker Tools.
Yeah, so we could go. I mean, there's probably 2 or 3x just off the top
Oh,
of
yeah.
our head we could name there.
Yeah.
Again, it goes back to, the biggest challenge we have to make around technology is that it's not so Book It Now or any of these other tools. I'm super bullish on Book It Now. I'm super bullish on Parade. I like things that are appless. You got to train people on how to use them. You've got to comp them correctly, right? You've got to have the right processes in place. It's not as simple as flip a switch and get the results you need. So even though you can be enabled,
Mhm.
like you actually have to enable people.
You do, yeah.
And so like the human element, it always just keeps coming back to the human element.
Yeah.
So
Yeah. And Emerge is another one.
Emerge.
Yeah. Emerge, who's basically they're sponsoring our 2020 forecast that we're having a live event on Friday at 2 p.m. Eastern Standard Time. It'll be live streamed.
You just worked this back to get the plug in.
I
Plug
do.
it.
Yeah.
You got to plug. You got to plug everything.
Who are you
right?
here for? Are you here for me or are you here for
I'm,
Emerge?
for everyone.
Yeah,
Right.
yeah.
So basically, we're doing a 2020 forecast
Yeah.
that the Freight Intel Group and the Passport Research Group did. We'll plug Passport Research as well, which is an outstanding, great product that FreightWaves has out now. It's tied in with
Also
event
a fan,
tickets.
yes.
Yeah, definitely event tickets and Passport Research, Freight Intel Research that Andrew and I do, and it's all there. FreightWaves.com/passport.
It's kind of like your. It's
So
kinda
my
like
plugs
your
are
way
in right now.
your way to buy into like airline status
It is.
with FreightWaves.
Oh, it
right?
is. Yeah. So basically, you
Are you getting
discount-
a special? Do you get a special badge at
do,
like
yes.
FreightWaves Live?
Yeah, I think
Yeah,
there
you
is
do,
something
yeah.
involved there.
Oh.
You
Yeah.
do. So basically, it's discounted FreightWaves Live tickets. It is research on top of that.
Yeah, looking at
Private
150,
passport.
150 research projects per year from the Passport team,
Yeah,
plus a
We
few
have our
dozen from
own
us.
Slack community
That's all. Yeah,
that
and
has access to all of it.
the research you guys do is I mean,
Thank
your team, JP's team
Thank
now,
Yeah.
is really invaluable stuff.
Yeah. Which brings me to the next kind of plug and
And
let's talk
topic
broker
comp.
comp,
Okay.
right? So we did a big survey on that. Found out kind of what the average comp is, and it's right around $40,000 for an entry level freight broker, carrier sales. I kind of lump those two buckets together. If you're entry level, whether you're a freight broker or carrier sales, you're doing the same job, right?
Mhm.
You're basically calling carriers.
Yeah.
Until you get your feet under.
Yeah.
you.
Absolutely.
Yeah, exactly. So you do a lot of comp, freight broker comp,
Yep.
transportation comp in general. What are you seeing out there?
The thing I thought was most interesting on your report, we get this question a lot, is like, do I have to be in Chicago? Do I have to be in Chattanooga?
Mhm.
Where can I be? I thought it was really interesting that you found that a lot of the base comps were geography independent.
Yep.
That it was pretty standard, kind of no matter where you were. I thought that was really interesting. I mean, I know when I started in freight at Echo, I mean, I was making $30,000.
Yeah.
Living in Chicago, and a lot of times,
That's rough.
yeah. Oh, it was. You're
That's-
telling with $200,000 in law school debt.
Oh, yeah, I know, right?
You're a sales rep at Echo is not exactly how I thought I would be waking up every day. I mean, certainly it served me
True.
well
Yeah, it
going
did, yes.
forward.
Yeah.
But yeah, I thought that was really interesting. I mean, often our clients think I have to pay more to. We'll go into an organization and we'll look, and their base comp is way out of whack. And I got to pay more because I got to compete with the guy across the street, or I've got to pay more to get the talent in the door. And it's a good example of sort of like missing the point. Like, yes, it's easier
exactly
to fill
right.
the seat, but is the point of recruiting to fill the seat, or is the point of recruiting to get the right people and then motivate them the right way?
And one of the things is that the first brokerage job I had, I just got an MBA, and I was a freight broker. Not really what
Yeah,
I
yeah, I know, yeah.
expected either, but I was
Hopefully,
in
you
the
didn't have the debt that I had.
I didn't have the
Yeah.
debt, which is good. But what I found is that the pay really didn't matter because whether it's 35 or 40 or 45, it's not really going to change your life.
No,
But
the variable comp is.
the variable comp is plus the tools that you have in place that help your freight brokers or carrier salespeople be successful.
Yeah.
If you don't have those tools, you can pay whatever you want. You're still going to have high turnover.
Well, and you know what the most important input to that is training.
Yes.
Like Echo, when I started, I don't know what they do today necessarily, but when I started at Echo, I mean, we were training for 3 months. You know, we had a month in the classroom, and it was a mix of, you know, it was a mix of like, hey, here's freight, and here's how to use our tools, and then we spend a month just tracking and tracing freight, getting comfortable. First of all, getting comfortable hammering the phones.
Yes.
Getting comfortable talking to trucking companies. Then we spend a month in hot pod where we're trying to cover hard freight, and then we hit the floor. Yep. So like whether I'm customer facing sales or carrier facing sales, I know what a truck driver is looking for when they want to load, or a dispatcher is looking for when they want to load. So selling to a truck was an incredibly valuable.
You knew what was
experience.
a good lane, what was a bad lane.
Yeah,
But
for sure.
I had like 3 days of training with someone who never been a freight broker. It was an HR person. And then I was out, and I was getting people to give me freight. I was like, man, this is easy.
Yeah,
and then I tried to cover it, and I was like, what in the world?
Kevin,
This is horrible.
I'll never forget the first loads I won 3 loads. So I mean, I guess I didn't learn exactly when I got into training, but I learned something.
You know?
First loads on I hit the floor, I won 3 loads from St. Louis to Gainesville, Georgia, if you know where that is.
I do know where Gainesville is.
And it's like, I mean, and our carrier sales team at that time was probably 45 people or so. So like not small, but like they weren't covering this freight. And I spent an entire week to cover 3 loads. But I learned how to hammer the phone.
You do,
I
yeah.
learned those skills through training. And so to your point about tools, like, yeah, people need to learn how to use the tools, but like anybody you've ever met from Echo, they know one thing. They know how to get on the phone. I mean,
Yes.
they whether they know freight or don't know freight, they know how to get on the phone, and they know how to like effort their way through it.
And that's something that we found in our survey as well, is that like what are the attributes or most important to you? Education was dead last, right? So whether you have a law degree or MBA, who cares?
Yeah.
Can you get on the phone? It's hustle.
Can you hustle?
What was the number
so you
one?
got
Was it
tenacity,
hustle?
hustle, and persistence. That's the number one. And then you have communication skills. And then third, which a big surprise to me, honestly, was honesty and integrity.
Yeah.
Well,
Feels like
do.
you have to answer that.
it-
That was the as a
You really do have honesty and integrity
Well,
as a broker, because that will catch up to you very.
eventually it'll catch up.
All of the best brokers that I've ever met have a story about that like ties back to the idea of hustle. I mean, I got out of law school, it was 2009. I can't get job interviews. I'm literally pounding the pavement to get job interview, to get people to talk to me. They wouldn't, and I got to end up at Echo, and like I got a lot of debt. I'm making 30 grand. I'm living in Chicago. I got to find a way to make it work. And every of the best people in trucking that I've ever met have the story of how they had to just kind of hustle at some point, even if it was like, what was your first job out of school? Excuse me. What was your first job when you were a kid? Did you ever work before you graduated college?
Oh, yeah.
Or before you graduated high school?
Yeah.
Oh,
I graduated
yeah.
the day I turned
Sacked
15.
groceries.
Right. I worked in a warehouse when I was 13 years old in Florida that was outside in the summers. I mean, that's why I left Florida, because it's just too damn hot from that experience. So, and everybody, I mean, that's the hustle and the tenacity that really carries you through in trucking.
You do.
Because when it's easy, anybody can do anything when it's easy.
Oh,
Like,
yeah.
What do you do when it's hard?
Yeah, you tried to cover a flatbed load from Tulsa to Denver at like $2.50 a mile.
Yeah, the Sunshine State.
Yeah, I know, right? And with a very important client, and you got to go back and ask for money because no one's going to do it.
One of the best.
No one's going to do it for $5 a mile, $6 a mile, and you just learn.
Yeah, having to give bad news is probably like the number one most important
It is,
thing.
yeah. I think that's where honesty comes in.
Yeah.
Because very quickly you realize that I just have to be truthful. Yes, your trailer got confiscated by Mexican customs crossing the border. I'm sorry. I'll take my punishment right now, even though it really wasn't my fault.
It's
You're going to
100%.
scream at me?
It's 100% not my fault.
Of
but
course.
I mean, I'm the only person on the other end of this phone, so
I know.
like I'm behind the firing squad.
Yeah, go
Yeah.
ahead and give it to me.
I mean, I wasn't going to give those 3 loads back to my customer.
Oh, I know,
It
right?
killed me.
Exactly right. And
And
that probably almost did.
It did. And and when what happened, one of the biggest things I think I've learned as a professional is that like it's actually okay when you make mistakes. It's what you do after that means so much more. Tyler Durden, how much can you know about yourself? You've never been in a fight. You know,
exactly right.
And you come out of that and you deal with it the right way with your clients. This is a little bit a field of like great quarter guys. This is more like FreightWaves insiders. I feel like.
That's fine.
But that's the
It really is.
that's the tenacity and the hustle piece. And so, the biggest things is how do you reward that behavior those are the most important things that you want.
Yeah.
So how do you reward it? And there's these competing incentives within organizations, right? And so, HR wants to fill the seats. HR's job is to fill the seats, is to get people, just to get bodies in there. And sales and operations job is to make money for the business. And you've got to keep in mind like what your goals are and what you're trying to accomplish and how you're driving towards that. And so, the biggest mistake we see is high base, low variable comp because then we get the people to sign up. But real hunters, if you have a real hunter in that seat, one of three things is going to happen. Number one, you're lucky, right? Number two, maybe it's only two things. I forgot what the third one is. Number two, they're going to be disincentivized to hunt. And they probably won't. I mean, we see a lot of times when we go in and make some changes that there are hunters hiding in plain sight. They weren't comped correctly. It was just luck that they, and so you got lucky. They came in the door and they took the job and they just kind of like middled around because the immutable law of compensation, challenge me on this if you want to.
No.
The immutable law of compensation, as far as I see it, everyone will work to their level of income comfort. And it's different for everybody.
No,
yours
I
is a lot higher than most people. Mine's a lot higher than most people. I just met you, so I'm not sure, but
his is a lot higher too.
I'm going to speculate from what I've heard about you. But everybody will work to that level of income comfort. Yeah. Because then eventually they'll make a math decision. How much more work do I have to do for the return?
Oh yeah. People make that decision every day.
Every second of every day.
I have a question for you on compensation. And do you see a difference between a carrier broker and a full brokerage?
Like an asset, non-asset.
Yeah. So basically, you have basically your brokerage from a carrier.
Yeah.
Maybe small, middle market, or just a flat out brokerage.
Do we see a difference in like how their comp models are built?
And kind of how their compensation models are built.
You have to look at sort of customer segmentation and freight mix. I mean, so if you take a full non-asset provider, they're almost always more transactional freight.
Mm-hmm.
And asset non-asset is almost always more contracted freight, right? And that's sort of size independent.
Yeah.
And so yes, I mean there are definitely differences because in that hunter farmer paradigm, you almost have to add in to the non-asset side of a trucking company gatherers who are there to execute the freight.
On the trucking side,
on the non-asset side, so freight will come in, and they'll either have dedicated carriers that quote unquote dedicated carriers or core carriers that they've sourced, or they're running it through the brokerage and they're executing it. That's one of the biggest differences I think from a comp perspective that we see because you need these kind of gatherers, and you don't want to overpay for that like activity of just like taking in order tenders and sending.
So I've seen sometimes like the trucking side, which is asset based. It's more contract relation, long-standing partnerships. That your comp's not quite as high as on the non-asset side.
Yep.
You are a hunter,
and
you're making money out of no assets.
Yeah,
right.
Absolutely.
And that's basically you keep all that margin.
The assets
you don't get paid quite as
you don't. I mean, definitely
high because there's some kind of internal
some of that's
struggle
mentality.
Between that.
Yeah, it's an internal struggle. Yeah. I think I said to you before we walked in that a lot of times we're just trying to challenge our clients to stop thinking like trucking companies. Right, and so it's an internal struggle of like the assets do absolutely kind of give you an advantage, but like how valuable is that is a real open question.
Because you have assets, you're not going to go out and sell things that those assets can't fulfill. But as a broker, you don't have any assets, so you're going to go sell whatever you can and figure it out later.
A lot of what we're talking about and working on with our larger clients that are asset non-asset is how to drive this enterprise decision making within their organization. So like a load comes in, how do we maximize operating income from like the assets and from a load? So here's a great example of that. Load comes in and we have an empty truck. Should it be first offered to the brokerage to fill a load for the brokerage? I would argue no. I'd argue that it should go out to the market. This is almost like AWS, right? For Amazon. Amazon, they built a product and they're like, we're going to expose it to the market to make sure that we're best in class. So there's a corollary here. No, I mean, if there's somebody out there paying an over market rate, I'd rather take that load, put it on the truck, and let the brokerage go and find an at market or under market truck for their load, and now we're maximizing our operating income. That's changing your mentality of thinking about yourself as a trucking company, and like everything's got to feed the trucks, and and like the trucks are the core of the apple. Maybe we should edit that one out because it's a relatively specific reference. And they are not a current client of ours, but so just to be anyway. So but stop thinking about so how do you build comp around that? And so the non-asset side of the asset companies, like part of the reason they don't want to pay these brokers more, and I know broker is a 4-letter word for them,
course,
but they don't want to pay brokers more is like, we feel bad about that back at headquarters because the people on the floor down there aren't making as much money. But
sometimes brokers are making more than like the CFO and COO of the trucking company.
Yeah. Yep.
And
people are real uncomfortable with that.
They are, but as a broker, you're just making money out of thin air a little bit. And I guess that kind of goes back to why broker is a 4-letter word.
Yeah.
But you kind of are. You're the conduit. You're the sales organization for trucking, for small carriers.
Regardless of what the role is, like whether it's an enterprise salesperson or a BDR or customer service for an asset company or carrier sales, I always come back to what is the value of that seat level employee, like and that goes to everything: compensation, KPIs, processes and procedures. What's the value of what they're bringing to the table? Is a carrier rep's value just booking a load, or is it building this liquidity in your non-asset network?
It's building liquidity,
right?
It is,
right. And so over time, certainly you need them to be booking more loads, et cetera. But like if you're focused myopically on any one metric or one KPI to describe what the value of that person is, you're directing them in the wrong direction. So, that's tricky. It's really, and especially when it comes to comp, that's really, really hard.
It is, yes.
How do you're not going to pay them for phone calls. You're not going to pay them for lanes entered into FreightFriend, which is a carrier CRM. Like, you're going to pay them for, you need to pay them off of something kind of tangible that goes to the bottom line. And that's where comp becomes really tricky.
It does. Yeah. It really does. Well, that was a good comp.
Yeah.
Riveting.
Comp
That was
discussion.
good.
That was good. Do you have anything else to add to comp?
I mean,
you could go on forever.
Yeah,
I could too. It's just
give me a topic. I mean, I can talk forever about anything.
That I do know. Yes.
Yes.
So that's good.
So we've got like 10 minutes left. We've got 3 topics left, but we can skip one if you want. You guys rather talk about you want to talk about coronavirus for a second?
Yeah, for a second.
Yeah.
Sure.
Okay. So we got Passport's got a project coming out this week on the coronavirus. Basically, its impact to shipping markets. Let's run down a little bit of the story here. Overnight the number of cases jumped 60%. Now it's over 4,500. Kind of expecting a similar jump by tomorrow. Over 100 deaths in China. Cases have now spread to 10 different countries or so. The best estimate and best kind of comp we have for this for what was the SARS virus back early 2000s. It killed almost 800, 27 countries infected. But the difficulty in comping at least the impact of freight of SARS to the coronavirus is how much China's grown since then. The things that are a lot of unpredicted world events, most of them are geopolitical. They actually have a good impact on ocean freight. They help rates for ocean shippers, for ocean carriers, but this one likely won't because of the inefficiencies that are created with people being afraid of the virus, which that increases prices. The drop in oil demand kind of decreases prices enough where it offsets that rates actually come down. SARS brought oil prices down 20% during when it happened, although it was short-lived. This one likely will be too. But what do you guys think? Kevin, we kind of did a little over/under on how many cases we thought would be here by the end of the week or by tomorrow. Kevin's a little bit, I guess, more bullish on more.
I'm not really bullish.
He's a bit more worried than the rest of us.
I basically,
as a guy who travels like all the time, I certainly hope.
Yeah, I know,
right?
right? I mean,
you ever read World War Z?
I have, yeah. It's a great book.
That's Mel Brooks' son.
I do, yeah.
But the way he lays out
how
how the virus can possibly spread. I mean, that's what
so there's personal narratives.
You're seeing with this coronavirus.
Yeah.
I mean, it's a great book, and how he lays out how this could actually spread across the world like that. I mean, that's what we're seeing. And as a guy who, the first thing when the case came through of hey, somebody came through O'Hare. Mm-hmm. The first question I got from 5 people was, "Hey, were you in O'Hare on this day?" Because we're in Chicago and I'm flying.
Yeah.
And luckily I wasn't, certainly,
Yeah.
but
They're screening passengers, I guess, from Asia in 20 airports now. I got that alert right
the
before
US, right.
JP and I sat down and talked about the research, which is available. There's an article that he wrote on FreightWaves.com, so you can go to that, see the video. But the full report that they did yesterday is really top shelf, and basically Passport subscribers have access to that with their events. So FreightWaves.com/passport. What do you think about the crew?
I mean, it's these things kind of scare me more than maybe they should.
Well, you know what? The scariest part to me is that it can incubate in the host or whatever for 1 to 14 days before you show signs.
Yeah. Oh God.
Symptoms, right? And that's kind of like the flu. So if it's as deadly as basically Spanish influenza, we have a real problem on our hands.
That's a funny point you make about Spanish influenza, though. This is now, 1720, 1820, 1920, and now 2020. There has all been a massive viral
That just
infection.
blew my mind.
True.
Pretty crazy.
That is insane.
It's a bit kind of a weird. It's good and bad times for the Chinese economy, I guess. The good times is that during this time, Lunar New Year, there's already have a lot of their factories are shut down. People are traveling,
true.
so there's not much like production drop there, but this is also a time where Chinese people go out, they spend a lot of money on retail and on food, they eat out with their families, they travel a lot, and hundreds of millions of people are being stopped from traveling. So yeah, I think some analysts and economists are saying that it could shave 1 point off, a whole percentage point off of the Chinese GDP this year.
Wow.
So it could end up being a massive economic.
I'm no math
meltdown.
major, but that sounds like a lot.
I know, right?
It's a lot.
Yeah. I studied Roman history in college, and then I went to law school. What do I know about math? But that seems like a lot.
Yeah, I mean, at a time when Chinese economy is slowing down, we'll likely have the lowest growth in a couple decades this year. So it's not great
Knows
timing.
his stuff, man.
He really does.
Yeah, really.
He knows his stuff. What do you think about the freight flows from China and basically the domestic trucking market? Have you been hearing anything from your client?
No. I mean, it's sort of like too early to tell. Probably.
Yeah.
We focus a lot domestically, and so there's that lag.
Yeah.
And to your point, Chinese New Year. I mean, things are slow for another couple of weeks at least. Probably another month or so.
Yeah,
normally.
they've extended that holiday again to give people more time, try to slow down the travel.
Yeah.
So we'll see. Once they come back from the New Year, we'll see kind of the disruptions that are still there because Wuhan, and I don't even know how to pronounce it. Wuhan, the closest seaport to that city, which is bigger than New York, is Shanghai.
Yeah, 11 million people. It's geographically 10 times the size of Dallas, so it is a massive city. It's
huge.
they have
and
so
the
many mega cities we've never
the
heard of.
closest
but
ocean
they have
port
one of them.
is Shanghai.
Yeah.
Right. So if it spreads to Shanghai, then that's a real problem.
Yeah. It's crazy to think how globalization has changed. I mean, has changed medicine in that sense.
Yeah.
I mean, and then it's also, being a history kind of guy, it's kind of crazy to me to think about like the Black Plague, how quickly the Black Plague spread, and like in a time when people didn't even go like 20 miles from their house, that took over all Europe.
Yeah,
and,
exactly.
So
yeah.
Let's hope with my travels I don't.
I know, right? You're always in airports on airplanes, so keep that mask on.
Yeah, I guess so.
Keep the mask on. So
maybe we should have been wearing masks.
Maybe we should. So before we get to long short, Ryan, tell us a little bit. I know we really haven't talked about Carrier Direct.
Oh, that's okay. Yeah.
In the consulting, we know you're a consultant. We know you're a lawyer. We know that instead of being a lawyer, you were a freight broker.
Can I make a plug? Since you made
please.
Co-founder of CortadoLife.com.
Okay.
Big Cortado guy. It's a coffee drink, so check us out at CortadoLife.com.
Cortado. So basically, what do you sell on Cortado?
We don't sell anything. So we travel all the time, right? And so we want to get good coffee wherever we go, and it's hard to figure out when you go somewhere, like, is there going to be good coffee? Is there not? Cortado is like a drink that's not super popular, so it's a little bit tough to get. Chattanooga, great coffee town for what it's worth. Like probably the best coffee town that we go to, particularly on a regular basis.
Have you checked out? I guess I'll plug a Chattanooga. Have you checked out Velo?
No.
It's over on the south side.
All right.
VELO. Probably my favorite coffee shop in town.
I love
Andrew, my man.
So we started CortadoLife.com around Mean Mug because we got these Cortados, and
Mean
so
Mug's great too.
Yeah, great Cortados. On the walk over here, I got Goodman's. What's right here on Market between? All right, never mind.
Doesn't matter. There's so many.
Yeah, so many good coffee shops. But So that I would do that with my teammates because we travel all the time.
Oh,
So
okay.
we'll get a cortado, we'll take a picture of it, and we kind of post it on the website.
Oh, okay.
Okay, perfect.
It's just it's
Good
a
coffee
fun
blend.
Okay.
it's a fun thing.
Okay,
a lot
very
like
good.
Great Haircut Guys.
I know, right?
Yeah. So John,
definitely.
my teammate,
I
started Great
can't
Haircut
wait.
Guys. Yeah,
Yeah.
for sure. Yeah, it's a good thing I have this beard. I don't know how anybody would be able to tell us.
Oh, I know, right?
I mean, you're much thinner than I am, but that'd be about it. Yeah, Carrier Direct. We work exclusively in transportation, and we're a mix of people like me who are deep industry experts, some traditional consultants, and then we also do technology delivery. So we have engineers and product managers. So we do technology delivery and traditional management consulting. Our clients range anywhere from $20 million trucking companies up through some of the largest in the industry: JB Hunt, FedEx Freight, FedEx Custom Critical, GE Transportation, Covenant, Werner. So we work all the way through the middle market there. And we basically have 3 lines of business. We help people with traditional management consulting things, which is like process improvement or compensation restructures,
Exactly.
greenfielding a business unit. Let's say you're a trucking company and you want to open a brokerage. We'll just brokerage in a box. Technology strategy. What's your 3 to 5 year technology strategy? Frameworks for making buy versus build decisions, and then organizational changes that go along with that. And then we also do custom technology development. So that's strategic integration work. And then we build proprietary software for our clients. And my personal goal, kill TMS. Kill the word TMS. Let's strip it down. Let's just get it back to its roots.
Get back to loads and
Yeah.
execution and know where your stuff is.
Yeah.
Right.
And that's why we're great partners on this podcast.
Yeah.
We have this broad industry perspective of the conversations we have every day. And so, to be able to contribute a little bit here and with the research when we're not in town, and then certainly to jump on when I'm here.
Yeah,
Happy
it's
to do
great
it.
research.
Yeah,
you guys
thanks.
provide.
Shout
in
out to
every
Diane.
segment. Yes, shout out to Diane.
And shout out to you for coming out that night and helping me talk Peter into it.
Oh, I know, right?
Yeah, we
I
really
know. We
did
had
a
to
great
corner them and make them do the deal.
Yeah,
So
it was great. Yeah, it was great.
It was great, and that's Carrier Direct, and it's carrierdirect.com.
CarrierDirect.com. Yeah,
Find them there.
it's on LinkedIn.
How do they get a hold of you?
Me personally?
Yeah, because you're all over LinkedIn. I
am.
assume you're all over Twitter too.
The only thing I do have a Twitter. It's _user prime. But really, the only thing I post on Twitter is just what comes over from LinkedIn.
Okay.
LinkedIn's where you get the best Ryan Bradley Schreiber Esquire
You do, yeah.
content.
Yeah.
Some really good stuff there. I'm very much like an art of the possible person. So if you like the art of the possible, LinkedIn's probably the best place to find me. And
Very good. What's your email address?
rschreiber@carrierdirect.com.
We'll put his LinkedIn in
Yeah.
the
we'll
article
do-
or something.
We'll put that in.
Yeah.
We can have a link to it.
Yeah,
Yeah.
definitely. Yeah. So
Cool.
let's do the long short
it up.
on
I'm
the
excited
way
about this.
out.
All right.
Should be
Uh,
good. What do
so
we
yeah,
have this week?
Basic, I'm sure you've been a fan of the podcast. You go
yeah.
long or short. You're either for or against an idea. The number one is Amazon spins off AWS in 2020. Long or short that idea. Start with Ryan.
Start with me.
Start with
God.
it. Hop in.
Yeah.
I haven't
Puts on the spot.
I haven't really heard anything about this, so this is a new thing to me. I would be short on it only insofar as what's the strategic value there for Amazon. I mean, they essentially have it as its own standalone product because of the way that Amazon, operates as a business. And so what's the advantage there that they'll be able to bring that public and make Jeff Bezos the money back he lost in his divorce? I don't necessarily see the strategic advantage for Amazon as a business to do that.
I'll hold off, Kevin.
I think I'm not long for 2020, but I think they will eventually do it. I think it will eventually do it because the shareholders of Amazon will have stock in that AWS.
Sure.
And I think it'll be a great special dividend, basically, for those holders. And I think that I think because we got this from the same article. I read it. Scott Galloway's latest blog post.
Yeah, he did his 2020 predictions.
Yeah.
He predicted that they would. Yeah.
If you put the multiples on, if you put the same multiples on to their competitors, AWS's competitors in the public market, I think they are valued higher than Amazon is.
Correct. If you put a Salesforce
Right.
multiple, on AWS, it's now worth more than Amazon as a whole
Salesforce,
currently.
that's right.
I think that's the value in it. It's that the fact that if it's kind of like this XPO story where we talk about why would XPO spin off these business units? It's because they
Yeah.
can get a higher multiple in the public markets and they can get more respect from investors if they have pure play plays in it. So yeah, I do think that they spin it off, especially. But I think there's one factor that makes a big, huge difference, and it's
What's that?
if the Democrats win the 2020 nomination, then they feel the antitrust pressure to do so. If Trump gets reelected, I don't think they feel the pressure from antitrust. They likely don't do it.
Interesting.
Well,
If the Democrats
interesting. I
win,
didn't think
I'm
about
long.
that.
I the XPO corollary. I know that I'm probably drilling in on this too much, but the XPO corollary, I think the biggest problem I see with that, you guys did a great job of laying out like what they could do with that money. Amazon doesn't need that money to like reinvest in the
Insurance,
business.
pharmaceuticals. There's a lot of other avenues they want to go down.
I guess that's true. Yeah.
I
I'm open to having my
I think
mind
we're
changed.
just thinking we're thinking too small for Amazon. One day they were a bookseller. Now they're the biggest seller in the world. I think
Yeah.
these guys can do whatever they want.
Yeah, you
Like,
should
they'll figure
read
it
the
out.
Amazon way. Ryan Rogers gave that to me, and I read
Oh,
it.
yeah?
It's great. Yeah, it's really good.
So we've been wrapping these up with sports the last couple of weeks. So
Yeah.
we've got one more. I don't know. You a Bears fan? You're not from Chicago.
No, I'm a
but
Tampa Bay Buccaneers fan.
Bucks
Yeah,
fan.
much worse.
That's
Oh,
rough.
that is much worse.
Bears
Yeah,
fans hate themselves. So like actually it's probably worse to be a Bears fan, but like purely on the field. I mean,
Yeah.
there was 10 years or 5 years where it was pretty good, and I got to go to the Super Bowl and with with my dad as a like 18-year-old or whatever.
nice.
But
That's pretty awesome.
that was awesome, but like outside of that, it's just been miserable.
miserable.
Yeah,
Good
absolutely
mention of the Super Bowl. We are going to go long short. Andy Reid wins his first Super Bowl. Kevin, start with you.
Has he not won one?
No.
I thought
No.
he
He went with
win
the
one
Eagles. He went with the Eagles, but they lost to the
they
Patriots.
lost, yeah.
Didn't he?
He's-
Before that, he was with
He's
Green
been
Bay,
he's-
right?
Yeah. Nobody won it, and I don't think maybe not as a head. He's never won as head coach. He might have been the offensive coordinator with Favre one year,
Maybe.
but he definitely never won as head coach. He's won
Okay.
now he's 2-4, 2-5 in championship games.
So I really like Patrick Mahomes.
Oh God,
I
yes.
love that Kansas City offense,
But
but
there we go.
I never bet against a good defense. I got to
That's
go with San Francisco.
That's exactly where I'm at.
Yeah.
The number one. I don't know that San Francisco's number one. I'm not entirely sure. The number one defense and the number one offense. Every time they've played, number one defense always wins.
They always.
I
win.
mean, my gut tells me Patrick Mahomes is like just special,
oh yeah,
and I love the guy, and like he is the most fun player I think I've ever seen in any sport. But like you gotta, I think
defense always wins.
defense always wins. Kyle Shanahan, the Kyle Shanahan will stick to the script of run the football,
Mhm.
which the Titans got away from in that game, right? And that's the biggest reason they lost. If Kansas City gets up, it's going to be hard, but Kansas City's kind of been slow starting in these playoffs. The last two games, they've been down at least 10 points. So it'll be hard to come back against that San Francisco defense. So I want Kansas City to win, but I think I got to be short on it. Because of the defense. I'm with you on that. We didn't talk about this in advance.
No, we didn't.
Boom,
We didn't.
boom.
I'm long because I really like Andy Reid. I like Kyle Shanahan too, but he's so young. He'll go to another 5 Super Bowls. Andy Reid, he's getting old. I love Mahomes. I love the offense. They're so much fun. Big game Andy's finally going to win the big game. I think they get
I hope
the
so.
dub. Yeah, I do. I
I
think they
just
win.
do.
I think they win by 3.
Yeah, I'll probably root for Kansas City, but
yeah, for sure.
If I was to lay a wager, which
It's 1 point. So
sometimes I do,
better
sometimes I don't.
better off taking the money line.
Is
1
Tulsa
point
more
spread.
is Tulsa more a Dallas like a
Dallas. Well, Dallas and Kansas City.
Yeah,
So
okay.
so basically, our local markets, we always got the Dallas game and Kansas City game. So I grew up watching both.
Yeah, cool.
I was a Dallas fan. Still am a Dallas fan, even though they haven't done anything in 20 years.
Yeah,
I
or more.
or more, really.
I always hated Andy Reid when he was like I actually never hated Andy Reid. I hated those Eagles teams because they were good when,
They were
when
so
Andy
good.
Reid was there,
Yeah.
and that was when the Bucks were good.
Mhm.
So like I hated those Philly teams, but like there's something about Andy Reid that's actually just kind of likable.
Oh, yeah.
He seems like a
Yeah.
good dude.
Yeah, he seems
Yeah.
very
And then
good.
Patrick Mahomes, that's a match made in heaven.
Oh yeah. So I'll
agree.
probably root for Kansas City.
Yeah, for sure. I'm rooting
But,
for KC.
you know what? You
Hard.
always bet the defense. Is that Oklahoma Sooners fan?
Boomer Center.
Take the
Boomer
defense.
Sooner.
Yes.
Always take the defense
Oh, for sure.
because you can have the greatest offense in the world. You're still going to lose.
Defense,
We always lose.
defense doesn't
because
have
we don't
slumps.
defense.
Defense travels. Like I agree
Yeah.
with you for sure.
Yeah, definitely. All right.
All right.
Next
Good
up.
stuff, Ryan.
ESPN.
Thanks
All
for
right.
coming on, my man.
Yeah, thanks for
Been fun.
having me, guys. Yeah,
thank
glad I
you.
was able to come
Come
down.
on anytime.
This was a lot of fun.
Yeah, it's great. And thanks everyone that's watching or downloads this in the future. This is Great Quarter, guys, and catch us next week, Tuesdays at 2 p.m. usually. So
All
here we
right.
go.
Usually outro. Great time.